In this video, I'm going to explain why I'm still bullish on gold, and I'm going to do a full, complete top-down analysis. So make sure you like and subscribe because this is going to be a great video. You know, when you're doing any sort of daily bias, top-down analysis, weekly analysis, the first thing you want to do is you want to get the weekly chart, right? And the weekly chart is the most important chart in all of trading. And it might not seem like that, but this is what smart money are really looking at, right? They base their decisions off the weekly chart and then they execute on the 4-hour chart and sometimes the daily chart, right? But when you've got the weekly chart up, there's only two things you want to ask yourself. The first thing is, where is this market trending, right? And obviously with gold, really obvious, right? Really obvious where the market's trending. We are bullish, right? So nice and easy to see on the weekly chart. The only thing you want to really pay attention to on a weekly chart is chart, right? If you see consolidation, you're going to see that on the 4-hour chart and you're going to see it on the 5-minute and even the 1-minute chart. So the first thing we look for is the overall trend. The second thing we look for, and this is absolutely crucial, so make sure you pay attention to this bit, is you want to study the most recent price action, right? Now, what does that really mean, right? What I really mean by that is you want to study these candlesticks here, right? The most recent price action, because remember, we're on the weekly chart. This isn't, you know, the 5-minute chart, and we want to see an order block entry, right? We don't care about this order block. We don't care about, you know, this fair value gap all the way down here. The only thing we care about is the most recent price action because this tells us what the market is likely to do next. So here we are, right? This is the most recent bit of price action. First thing I care about is this order block here, right? So whenever you're doing your analysis, you want to look at order blocks, fair value gaps, and liquidity. And, you know, we'll talk about those two later on. But the first thing my eye see is this order block here. And this is really, really important, right? So make sure you pay attention to this bit here. So this is the order block. This entire thing is an order block, right? But the body of the order block is the most important part of it. So let's just mark out the body of the order block. But just remember, this entire thing, so this whole wick, is an order block. But the most important part of an order block is the body, right? Because this is where all the volume is. So if you've ever done, you know, volume profiles, which I'm not going to talk about, but, you know, the thing where it's got the thing on the side, the bell curve, the normal distribution is all within the body. The body is smart money, the wick is retail. Probably want to write that down on a post-it note somewhere because that is a gem right there, right? But the key thing that I care about on gold about this is, can you see this wick here? So remember, the entire thing is the order block. Now, can you see this wick here? I'm going to mark out this wick, right? Can you see how price, right, on this wick, it comes all the way down, it hits the wick, but it does not hit the order block's body. That right there is one of the strongest signs you can get in price action. So really pay attention to that. The fact that price did not touch this body and just shot right off without it tells us that we are incredibly bullish. We are incredibly bullish. Price is so bullish, in fact, let me make this really clear. Price is so bullish that it could not even tap the body, right? It just shot right off without it. That is one of the strongest signs you can get in trading, and it's on the weekly chart, right? So this tells me already the order flow, which really means the higher time frame direction is bullish, right? Smart money are, you know, essentially holding price, right? They're essentially holding price at this level. Price could not even touch the order block. I really like to see that. That is really good strength here. And for the rest of the weekly chart, so around this bit here, it's quite hard to see on the weekly chart, which is why we move down to the daily chart, right? It's a bit choppy here. I want to see more stuff in price action. So let's get down onto the daily chart. But just remember, we had price respecting that order block, right? So here we are on the daily chart. First thing I look to see is, can you see this wick here, right? Price comes into this fair value gap right here. And what does it do? I mean, look at this, right? Look how beautiful that is. The bodies don't even touch it. And you know how I was saying bodies are smart money? Right, that's where the real money is, in the bodies. The wick is retail. Look at this. Smart money doesn't even, I mean, obviously the wicks touch the fair value gap. What do? We instantly shoot off. In fact, I have to zoom out just to show you how far we shot off, right? We shot off. Now, we almost took out all-time highs, right? But we didn't, which is important. We'll talk about that in a minute. Price starts to drop, right? Now, look, what's really important here is, you see how there's no bearish fair value gaps? There's no bearish order blocks. Price just shot right through it. I know there's a little bit of a wick, but there's really no defense, right? This high, you might say, all-time highs, nice and vulnerable. What I wouldn't want to see is, imagine if this was like a big bearish order block here, right? And price hits it and shoots off. You would not want to see that. So this is complete disrespect of the bearish side and complete respect of the bullish side, which again further adds to the, I guess you would say, analysis or probability that we are bullish, right? But what I really want to study is this bit here, right? Look at the wicks, look how the bodies don't touch it, and we shoot off. Now, can you remember, I mean, should remember because it was about 2 minutes ago, how I was saying how price doesn't touch the body of the order block? We almost have a similar thing here, right? So you've got another fresh fair value gap here that price could not even touch, right? So we've got multiple fair value gaps, which again is another massive sign, right? When price shoots off in one direction and leaves lots of strong fair value gaps, that again is smart money screaming at you that price is bullish, right? Big, strong, aggressive, bullish fair value gaps. And if you just look at the down close candles, small, dojis, lots of chop, right? The real order flow is bullish, right? But can you see how price drops down, hits this fair value gap and shoots right off? It could not even touch this fair value gap or this order block here. That again, more proof or more, I guess you would say, evidence that price is bullish, right? And the thing I really like, and this is why you have to do top-down analysis. It doesn't matter, you know, if you trade the 1 minute or 5 minute chart, because price is fractal. So the exact same order flow, so the exact same bullish movement you see on the weekly and daily chart, you're going to see similar stuff on the 1 minute chart, right? But really important here, really important to see how price does not even touch this fair value gap or this order block. Price is so strong that it could not even get all the way down here. Really important to see that. So let's just clean these charts up. What I want to study now is the most recent price action. Now that might sound a bit like a tongue twister, but of course, you know, if we're day trading, scalping, or even swing trading, this bit of price action is what we really care about, right? But can you see how we almost have, now I'm not big on, you know, market structure and swing points and all that stuff, but you can probably see we have this little price leg, right? This little bit of price action, this whole area, I guess you would say. This is what I want to study because this is the most recent move in price action. Price shot off, took out this high here, took out liquidity, and then started to drop, right? And we've left this vulnerable all-time highs there. Just remember, this is all-time highs. And look at the right-hand side of the chart. Can you see this? 3,500 big figure. Look at that. See how price almost touches it? Let me see, actually. Yeah. You can, if you look here, was it 499.97? Now, depending on the broker, it probably hit like, you know, 3,500 and then dropped. That will not stay for long, right? That's giving the illusion to traders that 3,500 is a top for gold. Lots of people are shorting. Lots of people, and by lots of people I mean big banks and hedge funds, because not all big banks and hedge funds are profitable. A lot of people get this confused. They assume that if they're a hedge fund, they must be making money. They don't. Maybe I can talk more about this in a different video, but you probably heard 90% of hedge funds underperform the S&P 500. In fact, I used to work for a big bank. They make all their money from churning, which is commissions, right? They have no care whatsoever for their clients. They only get paid based on commissions, so they get them in and out of positions, and the bank makes their money, and they charge ridiculous commissions. They're literally criminals, right? But anyway, this bit of price action we care about. See this fair value gap? See this fair value gap? Right, we wick into it. I know we go down, so we wick through the fair value gap. But where do we wick into? This order block right here. And then, do you remember what I said? Here's the wick. This is some advanced analysis, by the way, right? You don't have to go this in depth. I just enjoy doing analysis, and obviously the more things you can add, the more probability you get. But if you're understanding this, great job, because you're doing better than like 99% of traders, right? Because this is some pretty in-depth analysis. But again, see how we do not touch the body of the order block here? We shoot right off. Really, really strong sign here, right? Let's just actually let's just remove these two because we've got all-time highs up there. Again, price goes through the fair value gap, but where do we go into? The order block. And then we shoot off, we take out this high, we leave all-time highs, and price starts to drop, right? Now you might be wondering, okay, so, you know, is price reversing? You know, what's actually going on here? Two things to say. First thing, do not forget the analysis on the weekly and daily chart. I see so many traders do this, right? Price starts to drop. I mean, just look at these dojis, right? Look at these dojis, these little candles, and they'll just throw out the entire analysis that we've just done, right? This entire analysis, if you zoom all the way out, they'll throw out this entire trend, all the analysis we've done, and be like, oh, you know, T, price is starting to reverse. Let me look for a fair value gap and start to short, and then price will go right up and take out their stop loss, right? Do not fall for most recent price action, because you know, the lower the time frames you go, the more manipulation we're going to get. But let's get onto the 4-hour chart, because this is where it becomes really clear what's actually happening. So let's get onto the 4-hour chart. Zoom out. So if you remember, this is the overall price swing on the daily chart that we were studying, right? Really important. Now, if you remember, you know, maybe you watched the previous video I did where it was like how the Israel-Iran war impacts the markets. I'm not going to go much in depth, but if you're interested, go check out that video. What I was essentially saying, and it's actually crazy how this actually happened, is if you just take the Fibonacci, and this is the golden nugget, by the way, so make sure you pay attention to this. If you take the Fibonacci from this low to this high, do you know how I was saying this was like the overall price move, overall price swing, whatever you want to call it? Take Fibonacci from this low all the way up to this high, right? Now, this right here, I don't know if you can see it, this is the 0.5 level, the 50% level. Now, for those who are wondering about fib sayings, actually, let me just get it up, right? Let me just get it up. Yeah, take a screenshot. I enter my trades on this level here, and then this is just the midpoint, right? So, you know, for those who are wondering, pause the video and use it, right? Now, there's no magic in any of these numbers apart from the 50% level, which is really important. So, obviously, so smart money, right? They're smart, right? It sounds like almost like you get the point, right? But they know what price is going to do, right? Because they're the ones moving the market. They know price is going to come up and take out these highs, right? Now, smart money are not just going to buy at all-time highs, right? They can't just market buy like we can. They literally move the market, right? They literally move the market. They're moving billions and billions into and out of the markets. And you probably heard the stat where it's like $4 trillion moves into and out of Forex a day or something crazy like that. So they can't just buy randomly. Now they need to essentially, and all traders are doing this in one form or another, is buy the dip, sell the rally. Now you heard that, but what does that actually mean? This right here is a mathematical way of buying the dip and selling the rally. So because we're bullish, now if you were bearish, you'd flip this over. Because we're bullish, smart money, and this is on the 4-hour chart, they're going to consider cheap when price goes below the 50% level. The moment it goes below this light green line, the 50% level, they're going to start to buy, right? And as price drops, and I'll talk more about this, as it drops into fair value gaps, order blocks, and takes out liquidity at the, you know, this low, this low, this low, they're going to keep buying, right? This is a great buying opportunity. So in fact, their algorithms are triggered, or at least coded, as soon as price goes below this 50% level, they'll start buying, right? And you can imagine, if you've done any sort of programming, I'm awful at it, but I did a bit, you know, during my maths degree. You can imagine, right, an algorithm just coding this, right? As soon as it goes below the 50% level, it just starts firing orders, right? You can almost see this as a little baby wick here. I know we're on the 4-hour chart, but you can almost see like prices pumping up as it goes below it. But anyway, what does this really mean for us as traders, right? What it really means, and this sounds like a contradiction, and it confuses a lot. Actually, let's keep this Fibonacci on for a bit. Now, this sounds like a contradiction, and it confuses lots of traders, but price will go down so it can go up, right? Price is only going down to give smart money a nice position so they can enter their trades. It's the only reason price is going down. Now, as traders, we need to see, okay, where is smart money actually going to go for? And this is where the key thing and the only thing that moves price comes in, which is liquidity. Now, liquidity is by far the most important thing in all of trading. And for those who don't know, liquidity is simply stop loss orders, right? At major highs and major lows on the higher time frames, also on the lower time frames, but in particularly on the higher time frames, you will find lots of liquidity, lots of stop loss orders at major highs and major lows. And the only reason these markets move is for liquidity, is for stop loss orders. And you might be wondering, why is that? Like I said, smart money are moving billions into and out of the markets. They can't just randomly market buy. They can only do it where there's lots of money, right? Where there's lots of resting money. And they'll only find that where there's stop loss orders. That's the only reason these markets move. Now, I know there's fair value gaps and order blocks. Those are just nice entry patterns, right? The only reason it moves is for money. And hopefully that makes sense on a logical level, right? Oh, these big banks who have no interest whatsoever about me and you, they're only going to move into and out of their positions where there's money, right? It's nothing personal against me or you or, you know, anyone. It's just they need to get into and out of their positions, mainly for their clients, right? Because I mean, we can get, you know, as in-depth as we want to, but let's just imagine this was, you know, GBP USD, or even, okay, let's just say this is gold, right? You might have JP Morgan trying to buy gold for their clients, right? They don't give a shit about me and you. They just want to get into their positions, and a good way for them to get into, or the only way they can get into and out of their positions, is by targeting stop loss orders. So, let's remove the Fibonacci, right? You guys get the point of this. At this, so you can see there's liquidity which again, at major lows or major highs. And there's so many videos on the channel explaining liquidity. I think I'm the liquidity king at this point, so feel free to check them out after this video. But this low, liquidity, price shoots right through it. Let me just mark out these lows here. This low and this low. Now, this is potential targets, right? These are potential targets. Now, you have to be very, very careful if you want to short gold, right? Because overall, it's bullish. Now, can you short gold? Of course you can, right? I mean, look at all these down close candles. There are opportunities there, but the highest probability is always going to be bullish, right? Always, always, always will be bullish. In this case, right? Obviously, you know, if the analysis was bearish, the highest probability would be bearish. But you've got to be very careful once price drops below the 50% level, which we have now. You've got to be very, very careful because price is likely to reverse at some point, but no one knows exactly when. But as a scalper or day trader, you know, not the work. Let's say you get a liquidity sweep, and I'm not going to talk about entries in this video. You know, if you want to learn more about entries, you can go check out this video on screen now. But let's just imagine, right? You've got a liquidity sweep, which is just a fake stop run, fake move. Price shoots off, fair value gap, and you can ride price down to this low or even these lows, right? You can imagine that on the 5 minute, can't you? Oops, or the 1 minute or whatever. But anyway, price takes out this low. Where could it go next? What we're seeing here is disrespect of this order block here. So let me mark it out. You see how I was saying how if price was bullish, not if price was bullish, but price was really bullish because it tapped the wick and went straight off. Now the bodies are closing within the order block. That tells us that in the very short term, so the next few days, we're likely to see some bearish movement, which makes sense, right? With the overall analysis, that price is just going into the 50% level. So smart money can start buying. So I expect this low to be taken out. Who knows when price can start reversing? Like, who knows when it can start reversing? But we are in a golden zone for price to start to reverse. But price will move. It'll take out liquidity before it shoots off in the opposite direction. Now, the key thing is, I mean, some of you are going to try and pick the bottom. No one knows where this point will be. It could be all the way up here. It might not even take out this low. Or it could be all the way down here, let's say, to this order block over here. No one knows when it is, but overall, the overall order flow on the weekly and daily is bullish, right? So, only thing I want to talk about here, can you see this gap? Right? This is a nice bit of price action. So, this is very advanced, by the way. So, don't worry if you don't understand this. You really don't need to know this. All you need to know is the highest probability setups on gold will be bullish, but you might see gold drop down to take out some liquidity before moving up, right? But you know, while I'm here, I love talking about like price action and stuff, so I may as well just tell you this here. So right here we have a genuine gap. This is a genuine gap in price action where where there's no wicks whatsoever. Right, genuine gap right here. Now this wick fills it partially but goes off. That is what we call a volume imbalance, but there's still a little bit of a gap. Let me make this very clear. There's still a little bit of a gap when no price action whatsoever occurred. But this entire thing really, so if we want to be really into price action, this entire thing, it's a bit of a mess because it's technically a gap and a volume imbalance. All you need to know is this is like a fair value gap on steroids, which sounds crazy, doesn't it? But it's like a super fair value gap and acts as a magnet for price action. So if we zoom out, you know, and I'm not saying, you know, who knows, there could be like some sort of news event, some sort of war. I mean, like we talked about in the previous video, who knows, bomb gets dropped off, American soldiers get killed, who knows what can happen. You could see a massive wick, price hit this fair value gap, or, you know, volume imbalance, whatever you want to call it, and then start to shoot off massively, right? Just an excuse. You have to remember, every major news announcement, and by news announcement, I don't just mean CPI and stuff, although this does apply to it, but you know, like, you know what I mean, right? Like wars, conflict, pandemics, it's all manipulation to allow smart money to get into and out of their positions. It's the only reason it moves. So it would almost be like a smoke screen, right? Should a bomb get dropped off or war starts again, a huge wick down to allow smart money to buy, price quickly shoots off, right? And when price shoots off, these are your targets, right? This high and then all-time highs, which I think, with the analysis, I think we're going to take all-time highs again. But I hope that made sense. I hope you understand why I'm bullish on gold and why overall price is very likely to take out all-time highs. And if you want to learn more about predicting price, feel free to check out this video on screen now. And if you like these long videos on analysis, please do let me know because I enjoyed it and I can make a similar video on any other asset that you like. But yeah, make sure you like and subscribe and I'll see you guys next video. Peace.